When starting a company, choosing a business structure can feel like a boring formality. I know, I've done it. Then I started researching, and it feels overwhelming to make such a big decision with legal and tax implications before you've even started running your business. That's why in this podcast, we will help you get past those feelings and figure out which business structure is best for you.
Yeah, that's right, AJ. I've worked with tons of entrepreneurs, and when we start talking about business structure, they're always like, no, George, don't explain all this stuff to me. Just what do I need to do? So we're going to do that in this podcast. I'm going to show you a really simple way that's going to orient you to the right business structure for you. And then we're going to apply that to both if you're just starting out or if you've already got a business entity. Don't panic. We've got some solutions, and you can see either you're doing it right or the changes you might want to make in the future. Plus, we're offering a mini mastermind. There's a link in the description, and you'll be able to come on a Zoom call with me and ask any questions like corporate structure stuff. So we've got a lot for you in this podcast. Oh, and one more thing. I need to tell you the fine print because that's what they tell me to do. Whoever they are, right? No, so this is not legal advice. You need to consult your professional corporate advisors, tax attorneys, tax people, whoever those people are. We're just a couple of entertainers who have a lot of business experience.
Yeah, this is great to get into because they didn't even tell us about this type of stuff in business school.
What? Wait. You went 4 years and they never mentioned like how to have the corporate entity that you need or the business structure?
No, I think the assumption was we were just joining already formed corporations.
Well, okay. This is pretty important, guys. I've got to say.
Especially for an entrepreneur. I didn't understand it until I started my first company in school. And I was introduced to it by just researching through all of this information and trying to parse through it. And it felt like I was online dating, but I had to come to the first date with a ring ready to propose.
Okay, so AJ, it's not that serious. Okay, so you can change corporate structures a heck of a lot easier than you can change spouses. Plus, just because you've adapted a certain corporate structure, there's operating agreements, there's all these other things. We're not going to get into all those details today, but just know it's pretty fluid. So you want to select a good corporate structure, and I want to come at this from a completely different angle. What is the reason you start a company?
To make money.
Right. So let's look at this from a profit standpoint. And then what's the thing we try to avoid in business as much as possible?
Lawsuits.
Right. Okay. Risk. Okay. And so we're going to look at this from a profit risk standpoint. So I've put together a simple matrix that I think will help you figure out where you want to be. So we've got profit on the left side that goes from low to high, and then we've got risk from higher to lower. And for those just listening to audio, I'll try to describe this. Now, here's the key to this whole matrix is that it's a business structure matrix for single owners, okay? We'll do another podcast on multi-owners because when you start bringing that in, it adds another layer of complexity. However, with this structure, you're going to be set to bring in other owners, participants, partners, that sort of thing in the future if you want to.
So just from glancing at this, it looks like you definitely don't want to be a sole proprietor, right?
Right. Okay. That is the highest risk and lowest profit. And let me just explain what my profit driver really is on this, is taxes. Because with a sole proprietorship, what happens is all of your net income, so that's your revenue less any business expenses, all of that's going to run through payroll taxes, which is over 12% on the federal level. So that's your Social Security, your Medicare, and so you're paying that before you even pay income tax. Plus, you have no liability protection. So you're just hanging out there as an individual, and everything is at risk. So if the lawsuit were to come against you, something like that, you have no protection whatsoever. So we're not even considering that. Don't be a sole proprietor.
Yeah, and even though that's the name of what you would think, oh, I'm a single business owner, sole proprietorship, right. That sounds right up my alley. That's what I am. But no, you don't want to do that because it's going to leave you hanging and leave you liable to all sorts of risks.
Yeah. And even, look, guys, even if you're just starting out, let's say you're a content creator, you're doing editing, seriously, get some kind of entity.
So once you move on from sole proprietor and you don't want that risk, most people, and when I was starting my company, all I heard about was LLCs. Everybody in our program was an LLC, and it seemed like there was a bunch of lawyers ready to get us an LLC in like 20 minutes.
Yeah. Yeah. And it's like, were you ever told any other options? I'm curious.
No, just by researching, I saw them, but no one ever suggested anything else.
Yeah. So the single member LLC, guys, you don't want to do it that way. And here's why. You do get a little bit of liability protection, so that's good. With an LLC, you do reduce the risk, but a single member LLC, you still have low profits just like a sole proprietorship because all your net income is going to be taxed with the payroll taxes. See, these are all flow-through entities. And what that means is all the income's just flowing straight to your tax return. Now, there's a trick with a single member LLC that you could file as a sub S, and I'll explain that in a little bit. But I would prefer you do a sub S corporation. And that's going to get you, because what we can do with a sub S, whether it's an LLC or a corporation, what we can do with a sub S is we can stop the income flowing onto your tax return and being taxed as payroll. It flows a different way, and it's called business income. And so that gets hit with income taxes, but not payroll taxes.
So basically a sub S corp, that's helping you avoid double taxation, if I understand that correctly?
Okay, it's not exactly double taxation. What they're actually saying with a flow through and no sub S is everything's treated as payroll taxes. So it's like if you made $50,000 this year, then they're treating that like you got $50,000 in salary too. And you go like, well, wait a minute. I don't want it treated that way. When you do a sub S, you then can run payroll inside your corporation or technically inside your LLC. And when you do that, then you issue yourself a K-1 at the end of the year because you're going to expense your payroll inside your company. Okay. I know this is a little wonky, but just trust me on it. Okay. You want the sub S election. That's what you really need to hear in this, because now I can control how much is going to get hit by payroll taxes.
And so I want to circle back to the income taxes too. Does that mean you're going to pay income with a sub S corporation? Does that mean you'll pay income taxes at the corporate tax rate rather than your personal tax rate?
Right. That's a great question. The answer is no. So with flow through entities, the income, what we're trying to do is just get the business income hitting your tax return, and it's going to be taxed at your personal tax rate. Okay. So if your personal tax rate's 20%, then that's what you're going to pay. The corporate tax rate, that's actually technically a C Corp. Do not do a C Corp. Okay. So we've got two do nots. Don't do a sole proprietorship and don't do a C Corp, because, and I'm not even, there is double taxation with that, but I'm not even going to explain that. Come to the mastermind, the mini mastermind, click the link. All right. I'll explain it there if you really want to know, but you don't want to know. All right. Okay. So when we say flow through entities, LLCs and sub S corporations and sole proprietorships are all flowing through to your personal income tax rate.
Got it. So there's no difference in that regard. But from a payroll tax standpoint, being a sub S is protecting you from additional taxes.
Additional payroll taxes. Because what you're doing is you're putting your payroll inside your business. Okay. And so I can control how much my salary is. So to add another layer of protection, the ultimate would be having an LLC owned by a sub S corporation. So I still have a single member. I want to be the 100% owner. Okay. I don't want anybody else owning this thing, but I want an LLC. And so sub S corporations can own LLCs, and it becomes the single member of the LLC. All right. Now what happens is all the income from the LLC flows up to the sub S, but I'm paying myself payroll. And so only the business income will come over to my tax return. Now, what it provides is more protection because so if you wanted to sue me, you got to sue the LLC, but not the sub S because the business is operating inside the LLC. Now, I got to talk a little bit about this protection, or we're mitigating risk. But honestly, and this is a litigator friend of mine years ago explained it to me this way, and I thought this was good. All of this is merely legal speed bumps, okay? You're just slowing people down to get to, because they're going to go after where the money is, all right? And usually in these small corporations, I'm paying it out, so there's not any money, all right? But or there might be assets, there might be something they want. Okay, so if I've added another layer like an LLC owned by a sub S, and it doesn't add another tax return, it doesn't do anything, then that's just another layer of protection. That's the ideal, because then from there, I can start building more entities later or bring in partners or whatever. So it gives me a ton of flexibility into the future.
Got it. So this structure you're talking about here, I really like because it sounds like you're getting the best of both worlds. So
right,
when you're starting a company, is this how you would suggest to start, with a LLC owned by a sub S corporation?
Actually, I would keep it simple if I'm just starting out, and I would file a sub S corporation, because then from there, I can start building all these pieces in the future when I need them.
Okay. But I thought an LLC was the easiest thing to form at first, especially if you're going to have a sub S that's owned by an LLC. Why don't you form the LLC first and then figure out the sub S later?
Okay, well, personally, I prefer the corporate structure. And an LLC files and operates on a partnership.
So an LLC and a sub S make you operate the business differently?
Yes. It's kind of partnership versus corporation. I am not real inclined to partnerships, but there's some super great advantages to the LLC, especially if I'm bringing in people in the future. So I prefer the corporate structure, formal corporation. So that's shares, that all that sort of thing, being the top entity. And that's where I would start.
So then what's the difference between a sub S and a corporation?
Okay. So you form your entity, okay, either a corporation or an LLC. Then a sub S is actually an IRS election. It's super easy. You go to irs.gov, that sort of thing. And so you elect within 60 days to get your sub S election. That allows you to file as a flow-through corporation. So you're not taxed at the corporate rates, you're going to be taxed at your personal rates. And you can do a sub S election on an LLC or a corporation. And honestly, either one's okay. I prefer just the corporation owning the LLC and having both kinds of entities.
Okay. So then what would you recommend in my situation where I already had some partners and an LLC formed?
Okay. So let's break that apart. If you had owned it 100% yourself, we definitely would want to file a sub S election with the IRS. And the thing with that is you kind of got to go check some dates, because you're going to be filing it for the coming tax year. And so it changes your filing, and you just going to have to read those rules. But you can do it, and you need to, because we want to stop all the income being taxed as payroll. We want to be able to control that inside the corporation. Okay. So then if you've got members, then it doesn't all flow through like that. It's treated like a partnership. I personally don't like the partnership treatment for a number of different reasons. And you get into percentages and capital accounts and all this sort of thing. I would prefer it being treated as a corporation. A sub S election will do that.
Got it. And when you're talking about capital accounts, it's because a partnership, it's capital accounts based on capital contributions and percentages, where a corporation, that's going to be like traditional stock structure, right?
Right. And the other way that capital gets contributed is from the profits you make, or withdrawals from profits you lose. So if you have losses, okay. So there's this whole internal thing going on there. And real estate guys, look, do partnerships. Here's where I would take your LLC. I would then want to form what I would actually do is form a sub S and have it own the LLC or own your shares of the LLC. And that's kind of getting into multi type stuff, but that's where I would want to go, because then that's how I would bring other partners into this in the future.
Got it. Because then I can add them to the LLC while I still own my sub S. And then, like you were talking about earlier, I can see I have 2 speed bumps now between me and the business I'm doing.
Right. Now, guys, let me just say a couple of things here. Is that I don't want to get into the multi because it's pretty complicated and there's a lot of subtleties and nuances. Just remember this: you want to own you want to own controlling interest, okay? And there's a couple of ways you can do it. So when you file an LLC, there's a box, okay? And if you don't know what this box means, it can mess things up. And it's either managed by the members or managed by a manager. And this is why I like an LLC being owned by a sub S. You want to check managed by the partner. Okay, so you have a managing partner. You can be both, all right? And so now what that means is I can have a 1% stake or less in the company and have 100% control. Don't do 50-50 ever, okay? But as a single member, let's go back to that. As a single member, managed by the partner, you're going to be both, and you own it with a sub S, and it's a wonderful structure in that regard. And now what I've done is I've isolated my business. So let's say you had your LLC for your shoulder rehab, okay, device. And then you decided, I want to start a consulting practice on how to use it. But I don't want that to be tied to my product because I can have product liability and stuff like that. With the sub S, what I can now do is form a second LLC of the product device. Everything, the books, the income, the tax return, it's all flowing up to the sub S. So I'm only filing one tax return. I really only have to have one set of books. It makes it a whole lot easier. I have to have multiple bank accounts for each of the companies, but now I've got my consulting practice over here in a separate LLC. And so if I have a liability issue, it's real simple, but it's not a complicated thing to manage. And that's the key. We want to keep it simple, but we want to keep layers of protection if we can get them.
Yeah. So we're maximizing profit, minimizing risk, while keeping it simple for you to operate your business freely during the year and not have to worry about this business structure once you've set it all up.
Right. So guys, take a screenshot of the matrix there, figure out like where you fit and a good place to start. If you've got questions like, here's where I'm at, blah, blah, blah. We set it up wrong. We were giving crazy advice. What does this mean? All of those things, bring it to the mini mastermind, because you just click the link below, sign up. We do one a month, and we'll see you there. Until the mastermind, check out this video right here. I know you're going to love it. And in the meantime, may you live truly free.